Hello everyone, it's time for this week's market analysis. On this channel, we break down trading strategies and insights in a way that's easy to understand, all through chart analysis based on Dow theory. If you want to dive deeper into the methods we use, there's a link to an explanatory video in the description. Be sure to check it out. Let's get as good at technical analysis as a raccoon is at using its paws, crafty and quick. If you found this video helpful, please give it a thumbs up and subscribe to the channel. Now let's jump into this week's market. Let's take a look at the USDJPY chart. We'll start by reviewing last week's price action. Here is the weekly chart. This week, we saw a bullish candlestick with wicks on both sides. That makes it the third consecutive bullish weekly candle, following a bounce from the weekly resistance line. However, the candlestick body is getting smaller, suggesting that bullish momentum may be weakening. Next, let's look at the 1-hour chart. The yellow vertical line marks the start of this week's trading session. After the week began, price dropped toward the 4-hour support zone, which we had identified as the previous swing low. From there, it reversed and started climbing again. Here's how it looks on the 15-minute chart. It aligns perfectly with the bullish scenario we discussed in last week's video. Going forward, we need to closely watch how far this upward move can continue. Let's now break down the current market structure starting from the weekly chart. On the weekly time frame, this purple line marks the swing low, or key support, and price has bounced from this level without breaking below it on a closing basis. According to Dow theory, since the structure of higher highs and higher lows remains intact, the weekly uptrend is still valid. However, it's important to note that the correction has been quite deep and price failed to break the previous high. This suggests that selling pressure may be increasing. In short, we're in a somewhat unclear situation on the weekly time frame, with both upward and downward scenarios possible. One potential scenario is that this becomes a three-wave corrective move down. Alternatively, the pair may resume its uptrend. If we do see confirmation of a three-wave drop, the next key support would be here. This line coincides with a measured move target and has acted as a major reaction zone in the past. Now let's take a look at the daily chart. Currently, the daily chart is still in a downtrend. The last confirmed lower high is here, and since price hasn't broken above that level, the downtrend remains intact. This means the current upward movement is still just a corrective rally within the broader daily downtrend. Also, keep an eye on this descending trend line. It can serve as a reference point for where the rally might lose momentum. There's also a possibility of a breakout above the weekly resistance or a W bottom formation, so we need to stay flexible. Let's move on to the 4-hour chart. Here's how we're viewing the current wave structure. This upward move caused a trend reversal on the 4-hour chart. While there was a temporary pullback during the week, price did not break the 4-hour swing low, and the uptrend resumed. The current 4-hour swing low is here. As long as price stays above this line, the 4-hour uptrend remains intact. To evaluate how far this rally could go, we should also consider this horizontal resistance. This level acted as a neckline in an inverse head and shoulders pattern and could serve as strong resistance. Also, there's a head and shoulders pattern on the 15-minute chart around the same area, so this region may present multiple barriers to further upside. Given all this, it may be wise to take profits on the bullish positions discussed in last week's scenario. If price breaks below the 4-hour swing low, there's a good chance we'll see a weekly level three-wave correction downward. You can also draw an ascending channel from recent lows. If price breaks down through the lower boundary of this channel, that could signal a trend reversal. Now for the 1-hour chart, both the highs and lows are still rising, indicating that the 1-hour uptrend is continuing. The current 1-hour swing low is here. So to summarize the trend directions by time frame, the weekly chart is neutral and unclear. The daily chart remains in a downtrend. The 4-hour and 1-hour charts are both in an uptrend. Let's go over possible scenarios from here. First, the bearish scenario. Price has already hit the weekly resistance and reached its first downward target, so it's possible that the long-term uptrend may resume. For that reason, it's risky to enter new sell trades too early. Also, both the 4-hour and 1-hour charts are still in uptrends. If you're considering a short position, at the very least, wait for a clear trend reversal on the 1-hour chart. if the price continues to rise, it could run into the resistance levels we discussed earlier, which may halt the rally. However, don't enter a trade immediately. Wait for a clear, bearish reversal on the lower time frames before making a move. Additionally, the upper and lower bounds of the ascending channel can provide extra confluence for a potential entry. If price moves higher, the new 4-hour swing low would be here. Should the 4-hour chart break below this level, we could see a bearish wave structure unfold, and this would be a good opportunity to consider selling. Even if price begins to fall and breaks below the current swing low, selling from that point might offer poor risk-reward due to the nearby weekly resistance. In that case, it's better to wait for a correction or a pullback before entering. Now for the bullish scenario, if you're already in a buy trade from a lower level, you're in a good position. But entering a long trade at this point would be late and risky. Given that the daily chart is still in a downtrend and there are multiple resistance levels overhead, it's best to hold off on opening new buy positions for now. If price breaks through these resistance zones with strong momentum, then wait for a pullback and look for a buying opportunity from a higher low. Alternatively, if the market pulls back to the weekly resistance area, that could offer a more favorable risk-reward ratio for entering long. However, since we may not reach that point right away, there's no need to rush into a decision. In summary, the focus next week should be on taking profits from existing long positions and preparing for potential sell setups. Did you find that helpful? If you did, please give this video a thumbs up and subscribe to the channel. Next week, let's be as skillful with technical analysis as a raccoon is with its paws, and trade with the same caution a raccoon shows in the wild. I wish you all successful trades. Best of luck.